You can hear the presentation through your computer speakers or through your headset. However, if for some reason you're unable to hear the presentation, or if you prefer to use phone dial-in, you can click the information button above for details on how to access the phone dial-in. As we go through the presentation, if you have questions, please type them into the moderated chat window at the bottom of your screen, and we'll take those questions periodically when they come up. You can make the presentation full screen by pressing the four-way arrow button that you see in the top right corner of the presentation window. You can use the escape key to get out of that and to return to the initial view. And as we go through the presentation, if you have any kind of technical problems, please email us at support@xbrl.us. That's support@xbrl.us. Or you can click on the assistance icon under the emoticon button at the bottom of the attendee panel. So with that, we're going to go ahead and get started. And I'd like to introduce our presenter. Let me just open up our presentation here. Gregg Saunders. Gregg is CPA, lead taxonomist for XBRL US. He's a former partner from KPMG and is also CFO of a public company, so he has a tremendous amount of experience when it comes to both accounting as well as XBRL and the US GAAP Taxonomy. So with that, I'm going to turn it over to Gregg.
Great. Thank you very much, Michelle. And thank you to everybody who's participating today. So today our discussion topic is going to be dimensional modeling and how to apply dimensions to your financial statements for reporting in XBRL format. Take a look at our agenda. We're just going to go very briefly through the components of XBRL. I did not know or anticipate any specific level of understanding on the participation group. So I'm very quickly going to go through the components. Then we'll jump into dimensions, talk about fundamentals, talk about what the theoretical intersection that is referred to in defining facts using the US GAAP taxonomy means. And then we'll go through a specific example, taking a section of a segment footnote and actually mapping it, extending the taxonomy, so the company's own extension taxonomy, to tag it, and then going through the tagged fact values. As well as that, at the end of the presentation, which I believe is downloadable, you will find a series of resources that we will also go through at the end of the presentation. So with that, let's just jump directly into the topics of discussion. So XBRL components. XBRL is composed of two primary components: a taxonomy, which is the structure that defines and relates the concepts, and the instance document being the bag of facts. So if you think about a blank tax return, everybody either files some form of a 1040. So we all start with the same format. That would be our taxonomy. And when you complete that tax form, that would be your instance. So a taxonomy is the structure. That's where you are defining the concepts, and the instance is the completed format, the bag of facts. So if we just think of those two components, you can see the taxonomy is broken down into two components. There is the schema. That is where you actually define the concepts that are available. Okay, and so you know when you extend an element, you're actually creating that in your own, whereas when you use a US GAAP element, either FASB.org or SEC.gov element from the standard taxonomy, you're actually referring to that repository where that taxonomy is out on the web. The second component of your taxonomy is the link base. Link bases consist primarily of three things, but the link bases are there for the purpose of linking concepts to concepts, concepts to labels, and concepts to references. And from a concept-to-concept relationship, most, if not all of us, are familiar with the three link bases that we create in all our filings, which is presentation, calculation, and definition link bases. The presentation link base is where you provide the order of elements. It's primarily for rendering purposes, that's human readable formats of your XBRL formatted reported information. The calculation link base, which establishes the summation relationship between elements, and the definition link base, which contains all of the other relationships not provided by presentation, which only has a parent-child relationship, or calculation, which only has a summation item relationship. So the definition link base is where all your XBRL table, i.e. dimension, relationships are established, as well as many other relationships provided by the global specification. And the instance document you can see is the bag of facts. Now we are going to talk about dimensions, and the dimensions that we use in US GAAP taxonomy consist of explicit dimensions. That means that the dimensions exist and are defined in your taxonomy, in your structure. So the members that you define there are in the structure. They are called explicit dimensions, and they explicitly provide information on the facts to which they are related. In the instance document, there is additional information that you provide, additional context or metadata. And that goes on every individual value that you report in your instance. So looking at that and taking that into a real world analogy, what we have in front of us is a segment footnote from actually Ford. It's kind of apparent from the captions on the left if you start at the top under Worldwide Wholesale Unit Volumes. And you can see that what's circled in green here is a value of 12,415. Well, 12,415 in and of itself is just a number. We don't know what it represents. It could be the number of chairs, could be the number of erasers, number of employees, could be dollars. So if we take a look at everything circled in red, that is the metadata or context that helps us define that value so that when we report it electronically, it can be consumed directly into a database against which algorithms, analytical ratios, whatever you choose, can be applied against it in order to understand what that information is and to prepare the results that you desire, which is really the purpose of XBRL, is the electronic communication of your financial statements. So rather than me having to create my own individual database of your information, I receive the data directly, I can import it, and then do with it what I choose, which is why it's so important to properly define your values. Now, if you take a look to the left, you'll see sales revenue and financial services. So sales revenue, sales being the primary concept, the 12,415 obviously represents sales. And that would be the financial tag in our taxonomy, or what we would call a line item. We know that this is a segment footnote, so we would have a concept called segment or reportable business segment axis, and on there we would have a financial services member, which represents the financial services segment of Ford in this case. All of that is established in your taxonomy. That's part of your structure. But everything else you see, including Ford's CIK itself, goes on the fact value in the instance. Every value in your instance receives certain pieces of information, such as the entity, the decimals, which is the level of precision of the fact value. In this case, it's millions, so we know the 12,415 is millions of sales. The unit, in this case US dollars, which tells us what that value represents, what is the actual thing itself, and the period context. So at a minimum, those four pieces of information go on every fact value in the instance, whereas the concepts, sales, the segment axis, and the financial services segment member are established in our taxonomy, and they are part of the structure that we will use and apply period over period. This is just a nice graphic example separating the two components between taxonomy and instance, where we can see the concepts and dimensional elements that are established in the taxonomy, the structure, whereas the other metadata or context that's placed on every individual fact value in the instance. And that's really just a quick summary and refresher on what the components of XBRL are. Taxonomy and instance, taxonomy being the structure, the instance being the bag of facts. In the US GAAP taxonomy, we have things that are called dimensional modeling. Dimensional modeling is a way to use the same line items in a flexible format. So let's go ahead and start talking about the fundamentals behind dimensions, and then let's take it up and see if we can explain it and do what is, for many, a more complex example using segments. Just to go through some terminology so that we're all looking at this from the same perspective and we're on the same page. Some of the words that you might hear and be familiar with are table. In the taxonomy, the US GAAP taxonomy, there are elements that end with a standard label that has open bracket, table, close bracket. The word in programming for that table is a hypercube. A hypercube is a collection of facts arranged according to the structure of a table in XBRL. Okay, and it's done under the Dimension Spec 1.0, which is a global standard, and it's an addendum to the XBRL Global Specification, which is XBRL Global Specification 2.1. So a hypercube and a table are synonyms. They can be used interchangeably. You're probably more familiar with table. Also know that a table is an abstract element. An abstract does not tag data. It is used for organizational purposes. So whenever you see anything that has table, line items, roll forward, or ends with abstract, that is a non-financial tag element. So you're really using it for structural or organizational purposes. And according to the Edgar Filing Manual, anywhere in your HTML, printed published financials, you have a header that in your taxonomy in the instance does not tag a value, you are required to provide an abstract to provide that header. Have as many abstract elements as you want to organize your taxonomy, but at a minimum, you need to provide for the headers that are not associated to facts in your instance that are presented in your HTML financial statements. The next word down you see is dimension. Now, in the taxonomy, the US GAAP taxonomy, we call them axes. So an axis is any element ending with a standard label that has at the end of it open bracket, axis, close bracket. A dimension is another word for that. It's a word I prefer to use. And a dimension is a common theme about which you provide more detailed information. From an architectural standpoint, the US GAAP taxonomy, your own extension taxonomy, everything in it is a dimension, and the taxonomy itself, the entire taxonomy, is one very large hypercube. So for instance, your financial tags, primary concepts, line items, which are all synonymous, they are a dimension in and of themselves. And we're going to talk about how these dimensions interrelate to define the values. And that's where we'll get into intersections. But just know that dimensions are common themes about which you provide more detailed information, kind of like property, plant, and equipment by type. That's a common theme about which you provide more information. The dimension domain and dimension members are also called dimensional qualifications. The domain is the collection of all the members that hang or go on the axis. They are the specific adjectives and nouns that you are going to provide more information about the values that are being defined in that table. So the domain is the collection of all the members on the axis, and the member itself is the individual adjective or noun. It's the thing, the characteristic or feature, which is providing further definition of the values reported in that XBRL table. By convention in the US GAAP taxonomy, the domain is invariably, except for two exceptions, is invariably the defaulted relationship, which we're going to speak about next. What that means is that it's physically on the axis, but it doesn't logically exist on the axis. And the reason why we say that is because the domain, when it's defaulted, it doesn't provide any explicit information about the value to which it's associated. It's silent. In other words, it doesn't provide any adjective or noun on the value, and therefore, by convention, the domain element modeled on the axes in the US GAAP taxonomy are not meant to be interchanged, moved, or replaced on any of the modeled axes in the US GAAP taxonomy. And the domain element, when defaulted, that value is interpreted as being the entity-wide context, the consolidated value. And if you look down, you'll see where it says default or dimensional default, and that is a relationship placed on that element in the definition link base of your taxonomy, which is the structure that you use period over period to report your facts as tagged in the instance. The last thing here that you can see is financial tags, line items. Those are synonymous as well. You might also hear them called primary concepts, financial tags, or something of that sort. But those are the elements that actually tag the data. Members and axes don't tag data. They, in conjunction with the line item, add additional information to the line item. So you will note that in your US GAAP taxonomy, or if you extend members, that they are abstract true. In other words, they do not themselves tag data. They cannot exist without a financial tag or a line item. So just know the financial tags, the line items, they're also called primary concepts. They are the concepts around which the entire taxonomy revolves and is built. And the dimensional modeling is a way to use those individual line items multiple times in the same instance to report multiple facts because you are changing context. And every fact is unique, independent, stands forever once reported, and the only thing that distinguishes it from another fact is different context, similar to DNA, right? If you take out any piece of a person's DNA, they may appear to be the same person, but they are actually not the same person. They are different. So there may be no perceptive difference to you visually or through any other kind of sensory perception. But the fact is that if you move, change, or remove a piece of DNA, that person is not the same. If you change, move, remove any piece of context, it is a different fact. So every fact is unique, independent, individual. Once reported, it stands forever. Okay. When you think about dimensions, there's a given structure that's followed in US GAAP taxonomy. The first is the table abstract. Again, it is the collection of related facts arranged according to the structure of a table. You will then see an axis or dimension, that's the common theme, and you can have multiple dimensions, multiple axes, and I'll speak to that in a second. Every axis will have a domain, and the domain will have members. These are arranged hierarchically in the presentation link base, but they are also arranged hierarchically in the definition link base, and that hierarchy is very important. A taxonomy, and I don't know if anyone's ever looked it up in the dictionary, but a taxonomy is a set of defined concepts arranged in a hierarchical structure. Without the hierarchical relationships in XBRL, a taxonomy is nothing more than a dictionary, a flat list of concepts or defined terms. It is the hierarchical relationships that create a taxonomy. Similar to 10th grade biology when you learned about King Philip came over for good soup, kingdom, phylum, class, order, genus, species. That's a taxonomy, same as the US GAAP taxonomy, and it is defined concepts in a hierarchical structure that make it a taxonomy. So you're going to have a table element, it will have an axis. The axis is also called the dimension. It's the common theme about which you provide more information. In there you'll have a domain, which is the collection of all the members, the individual features and characteristics to and applicable for that common theme. And in the domain you'll have members, which are those individual features and characteristics. You'll also have a line item abstract. The line item abstract holds the financial tags in the table. Any element primary concept in the US GAAP Taxonomy, located anywhere, if it's applicable, can be relocated into a table. It becomes a line item. Any line item anywhere in the US GAAP Taxonomy can be used, if appropriate, without a table structure, and then it's called a financial tag. They are the same, and they are interchangeable. Just like words in the dictionary, you use the word that's correct no matter where it is in the dictionary. As long as it's appropriate, you apply it. The axis and member in combination, in conjunction with the primary concept, is what defines or provides definition to a fact. Again, that's established in your taxonomy. These are explicit dimensions. They are part of your structure. There's another type of dimension called typed dimensions, which are actually established in the instance on the individual fact, but we're not going to speak about them because they're not used in the US GAAP Taxonomy. The US GAAP Taxonomy, as of today, only uses explicit dimensions which are established in the taxonomy, the structure. It is the combination of axis member together with the line item that defines the fact. No one axis in any given table on any given fact can have more than one member to define it. So it is one member on an axis plus the line item that defines a fact. And if you have multiple adjectives or nouns that you need to properly define a fact, and we'll go through an example of that, you need to have multiple dimensions, because no one dimension can have more than one member that defines a fact in that table. And you can see those are both noted at the bottom of that slide. So let's just walk through the model in general. Then we'll go through a quick example, and then we'll jump into our more complex example using segments with the US GAAP Taxonomy. So the dimensional model, here you can see the red border around the entire structure or physical table that is columnar information. That is the hypercube. So the entire structure is the cube, it is the hypercube, it is the table. It's the collection of concepts that are related. When you think of the US GAAP Taxonomy, there are four primary abstracts that exist in it. The elements that end with a label, open bracket, abstract, close bracket, those are abstract elements. Line item elements, which hold the financial tags in a table structure. Roll forwards, which hold a movement from period to period, and those are the concepts that are rolling from period to period in the US GAAP Taxonomy. And tables. When I speak about tables, I usually refer to them as abstracts on steroids. They do not themselves tag data, but the table, since it has a collection of related information in it, does communicate something that you can infer from the definition or the name of the table. It's a little bit more specific than a balance sheet abstract, which we know is a balance sheet, but a balance sheet could have anything and everything from assets, liabilities, and equity type concepts in it. Tables are going to be a bit more specific than that. So the cube is represented by a table element in US GAAP Taxonomy, and it's an abstract that doesn't tag data. It's the entire structure. Okay. In that table that we were just looking at, there are two common themes. One is product line and one is region or geography. Those are the dimensions. They are the common themes about which we provide more information. You can have as many dimensions as you want. You can't have any more than one member applied on any given dimension that help define a fact in that table. So if you have multiple things to say to properly define the value, you need to have multiple dimensions. I would tell you humanly that if you have more than 7 dimensions, it becomes unwieldy and almost impossible to manage. I mean, I once saw a table with 30 axes in it, and I couldn't make sense of it. The fact is that if the axes in a table can never intersect, which is referred to as an orthogonal relationship, then you probably should have 2 separate tables. If they are indeed intersecting so that you may or may not have a value that uses the intersection between those dimensions, but theoretically you could have a value that uses all the dimensions in the table, then a single. But if the dimensions cannot intersect, you probably have two separate tables. Also, I'd point out that under region, you see things like North America, South America. There are continent members in the base taxonomy, the US GAAP Taxonomy. However, if you sit at a table and ask everyone to tell you what North America consists of, one person might say Canada, US, and Mexico. Another person might say Canada, US, Mexico, and Central America. Another person might say Canada, US, Mexico, Central America, and Greenland, and Puerto Rico, by the way. The fact is that nobody defines a continent the same way, and so from a data perspective, you need your members to be very specific and well-defined in order to interpret the data. So a continent, because it's not standard, really should be something that you define yourself. However, they do exist, and therefore you should use them to the extent that you need to. Okay, so we have two dimensions: geography, region, product line. Underneath our dimensions, we can see that we have members. These are the actual features and characteristics, the specific adjectives and nouns that we are using in conjunction with common theme to which they relate in order to define the values in our table. We only have one financial tag in this case, one line item, and that's sales. But you look at region, you have four members: North America, South America, Europe, and Asia. You look at product line, you have three members: hardware, software, consulting. Both the columns and the row that say total, that is the domain, and that's just a label that we put on it. Remember that a label is just a name you call something in a given relationship, but the concept is standard and doesn't change. It's constant. So for instance, I'm Greg, you call me Greg. That's my first name, and that's our relationship. But my children call me Dad. It's not that I change as a concept, it's just that my label changes based on who I relate to. Total is a preferred label that we put on our domain. The domain is the collection of all the members on the axis. So the domain on product line is our product line domain. The total or domain on the region is the domain for the region axis. And it's the collection of North America, South America, Europe, and Asia. Graphically, you could see that how these items relate is that the regions, the individual regions, roll into the region domain. That hierarchical relationship is very, very important. So for instance, you wouldn't want a state axis and a country axis, because the 50 states of the United States of America could only ever intersect with the United States member on the country axis. Therefore, they all go on a geography axis, and you nest or build a hierarchy of the 50 states underneath the U.S. member in order to electronically communicate the relationship between the states to the country, which is the United States. That hierarchical relationship is what makes it a taxonomy. It is electronically navigable, and although it doesn't tell you that they add up into a total or not, it does tell you that the 50 states, in our example, are subordinate to the U.S. member. So they are within the U.S. member, which, by the way, is on the geography axis. So we have our Europe, South America, Asia, and North America members, which are children to the region domain in the definition link base, which sits on the region axis. And an important point to keep in mind is you would never associate a member element, an adjective or noun, to a common theme and axis to which it doesn't relate. In other words, you would never put a segment member on a legal entity axis, because a segment is not a legal entity. You would never put a country on a legal entity axis or a legal entity on a geography axis, because they are not expected there, they are not applicable there. So you want your axis, your common theme, to be generic to and related to the individual members that hang on it. Okay, and again, by convention, the domain is provided the defaulted relationship in the US GAAP Taxonomy, and that by convention, what that means is that the value intersecting with it the domain doesn't provide any explicit information or definition on the value, and it's taken to be interpreted to mean the entity-wide context. It is non-dimensionally qualified. Okay, so
Greg,
let's take a look at some of the values in the product line domain. You could see, yes.
Hi, Greg. I'm sorry to interrupt.
Yeah.
A couple of questions, actually. If we could just take a short break here.
Go ahead, Michelle.
The question is, there is an element in the taxonomy called periodic lease payment. And without the period defined in an element, a data aggregator does not know if the payment is monthly, quarterly, or annually. There's no access in the taxonomy that lends itself to frequency. Likewise, the EFM doesn't want us to put periods into an element name. Let's see. Should we just leave the period undefined, or do we use a custom axis such as frequency and then define monthly as a member?
That's a great question. There actually is a dimension that's in the US GAAP Taxonomy, actually in the XBRL Global Spec, for period. And it's that date context that you put on the individual value that defines it as being a quarterly payment, an annual payment, with respect to the set of financials with which you're reporting it. From a lease term standpoint, which is how I'm interpreting your question, you have a rental payment that's due quarterly by the terms of your lease. And you're talking about the fact that there is a term for quarterly payments. But that's not a fact about the rental value, the rental payment value itself. That is a term of contract as embodied by the lease. So that would be a separate line item, i.e. description of lease or lease term. Okay, and as a lease, payment term or payment frequency of lease would be a duration item type, and you would report it as P for period, and if it's quarterly, 3M, 3 months. So again, when you think about it, the value itself is the lease payment. The frequency is a term in the contract, and that would be a separate line item. Now, how do you relate those two facts? You can use a dimension to relate them, and we can speak about that as well. But the primary purposes of dimensions is twofold. One is to disaggregate values. The other is to link values. So I hope that answers the question. If not, please submit a follow-up question, and we'll address it again.
Greg, we have
Michelle,
one more
is there
question
anything else,
here?
by the way?
Yeah, we have one more question. Question is, do you have to dimensionalize the sales where the total columns are? For example, you would dimensionalize the Asia total, but do you need to assign the total product line domain with no member?
Well, the domain itself is inherently the total, which is why the EDGAR filing manual says you should not create specific
Greg, does that make sense?
total members across domains. Yes. So if you look at the product line total, that is the product line domain, and it's just a label that we put on it that says total. So it's just a name we gave that member in that particular relationship. Now, if you look at the 51534, that's total product line sales for North America. So any one dimension in a table can have multiple defaulted values. 51534 is a defaulted value because it's the total across all product line. 42403 is total across all product line sales for South America, etc. Okay, same thing on the region. So the 134860 is the total hardware sales for or across all regions, so worldwide, consolidated hardware sales. Let me just see if I can't get my marker up here. So this 134860 is the defaulted region value qualified by product line hardware. So we know it's the total of all hardware sales worldwide. The 51534 that's circled in red at the top that's the total of all product line sales defaulted on the product line axis for North America. So it's the total of all North American sales. But any given axis or any given table, any one line item in any table can only have one non-dimensionally qualified value, and that non-dimensionally qualified value is where all the domains intersect. See, here our primary concept, our line item, is sales, and we know that our non-dimensionally qualified value of 217,910 is the total sales for the entity. It is the non-dimensionally qualified value, the entity-wide context. And Michelle, I hope that answered the question. If not, please have the person just submit a follow-up.
That's great. Thanks, Greg. No more questions for now.
You can have thank you. You can have as many dimensions in a table as you want. Any single dimension, any given axis can have multiple defaulted values on it, but any one line item in any given table can only have one fact with which it relates that is non-dimensionally qualified, and that is where all the domains, all the defaulted members come together. In our case, 217.910. So what is a line item? A line item is reportable information. In the most abstract theoretical taxonomy or XBRL taxonomy possible, you could probably get away with about 7 or 8 line items: value, percentage, number, area, quantity, description. That's the report, and all the other characteristics to define specifically any given value can be provided by dimensional context, whether explicit dimensions in the taxonomy or type dimensions placed on the value in the instance. Okay, again, the US GAAP Taxonomy only uses explicit dimensions, and therefore we're only going to speak about them. But in the most abstract, extreme taxonomy, you get away with about 7 or 8 line items. Line items are financial tags. They are what actually tag the data. Any tag anywhere in the taxonomy can be used in a table or without a table, depending on your needs and that it's the correct concept. Edgar Filing Manual 6.6.29 actually provides an order of precedence in selecting concepts. The primary thing is the period type. And you can't tag an instant with a durational concept, and you can't tag a duration with an instant concept. An instant is a point in time like a balance sheet, but what it really represents, and what I'd like you to think of it as, is the culmination of all duration. So the culmination of all duration is the entire timeline for a reporting entity. If the company was formed and organized in 1908, then its instant would be the culmination of all duration from 1908 through the date of your balance sheet. Let's call it 3/31/2014. So an instant is a very long duration, in other words, and it's used just because it's easier to understand and makes programming easier. A duration is any segment along that timeline. So if the timeline is 1908 to March 31, 2014, any individual segment, like the 3 months ended March 31, that's a duration. So a duration is a segment on the timeline, and the timeline is the entire timeline, the culmination of all duration. Okay. Any financial tag can be used in a table. It's called a line item then. Any line item can be used outside of a table, and it's called a financial tag. They are synonyms. They are data tags, primary concepts. Why do we have dimensional modeling? Dimensional modeling is provided because if you think that the taxonomy has a exorbitant 20,000 plus elements right now, if you didn't have dimensional modeling, every individual fact that you could ever report would have to be an individual primary concept. And you would have exponentially greater number of concepts. So if you look at the top part of the section, I took our example table, and you can see that we have 13 concepts to define 20 values. If we did not have dimensions, here we have 2 dimensions. If we did not have dimensional modeling in the US GAAP taxonomy, we would need to have not 13. But if you added a 3rd dimension to that, and you just say that the 3rd dimension has 3 members and a domain, so 5 more concepts, now you have 80 individual elements to define every intersection possible in that table. So dimensional modeling provides a flexible modeling structure to be able to use financial tags multiple times in the same instance. That's why they're used. It's economical, it's efficient, it's flexible, it makes sense. So whenever you say, why do they have these tables? It's because if you didn't, you'd have to have an individual financial tag for any permutation or combination of any financial reporting value you could ever think of. Dimensions are extremely integral to an efficient taxonomy. Intersections. It is the intersection of the dimensions that define the values. Not every value has to intersect, well, they all have to intersect with the axis, but they don't necessarily have to intersect with an explicit member. So that 51534 is indeed, it just happens to intersect with a product line domain, which is defaulted, which therefore doesn't say anything about the fact. However, everything in the body of the table where you have intersections between product line explicit members, hardware, software, consulting, and region explicit members, North America, South America, Europe, and Asia, are all the intersections that are defining and providing information to properly define the fact for electronic consumption. Again, individual value is going to be defined by the concepts in your taxonomy, and in addition, when you tag those values in the instance, you are providing more metadata, more context, at a minimum consisting of precision, which is the decimals, which means that 14,528 really, from an analytical standpoint, could be 14,527,500 or 14,528,499. The unit of measure and the period. That's the date dimension. These four items, by the way, and certain others are referred to as built-in dimensions because they go on every individual fact individually in the values that you put in your instance. They're called built-in dimensions. You don't need to necessarily see them. You just have to complete them. Okay. Whereas the explicit dimensions in your taxonomy, many of those you create extended members to properly define your segments, your products, etc., because your products are different than someone else's. So that's in your taxonomy. They are part of your schema. They are concepts that you've defined or that you're using. It's part of your structure. Okay, those are not built-in dimensions. Those are explicit dimensions. So let's talk about the intersections a little more. I was at a course that we were teaching, and somebody came up to me and said people were really confused by the way I kept referring to intersection. What's an intersection? So I thought to myself, well, how would I possibly explain this and make it simple? Well, if you take a blank piece of paper, which is what I thought, I would say take a blank piece of paper and draw a line. And let's say the fact that we're going to tag is one red wool sweater as of December 31, 2012 of ABC Company. So take that blank piece of paper and let's build the taxonomy first because we need a format to fill in with the values we want to tag. So we draw a line across the paper and we call it article of clothing, quantity line items, and we create a tag and we call it a financial tag, and it is our article of clothing quantity. So we have a primary concept. And I said, okay, now draw a second line right across it. And I went corner to corner. I mean, you guys could do this any way you want, but the fact is that these intersections, this orthogonal relationship, are just lines in space that can intersect. Two lines that run parallel are non-orthogonal. Two lines that can intersect are orthogonal. It means they can intersect. So let's draw a second one. We have our article of clothing, but now we need something that gives us the color because we have a red wool sweater. So I said, okay, let's create a color axis and put a red member on it. The axis is the common theme. It's the spectrum. The member is an explicit member. It's the color red. They intersect. We have other characteristics to define the value. It's a red wool sweater. So now we have red, but now we need a textile axis. So we create a common theme textile, wool member. We have a third characteristic, which is what kind of clothing is it? It's a sweater. So I create article of clothing by type. That's my axis. It's a common theme. I put a sweater member. These now all intersect. That's my taxonomy. That's the structure which I'm now going to populate with values. And there's the value 1. So what does that 1 represent? It represents one red wool sweater. Now, my tags tell me that in combination and know that the members can't change what the primary concept is. They can only add to it, add additional information about it. So if you're a man or you're a woman, I couldn't look at you and put you with an axis that says the man is a woman and the woman is a man. I can't do that. Why? Because I can't change the concept with a member. It has to be something that additional information, not something that is contrary or contradictory information. But what else do we need here? Now we're tagging the value in our instance, so we put an entity on it. That's a built-in dimension. We put a period on it. That's a built-in dimension. And this is going on that value in my instance. I put a unit on it, and I called it article of clothing. And that's a built-in dimension. And I put the precision of the fact value, and here I put INF because this is one article of clothing. It can't be any more or less. It's not rounded. It's not truncated. Decimals of 0 is just like rounding in Excel. 0 is to the one place, right? So 0, it's accurate to the one place. -1 is accurate to the 10th place. +1 is accurate to the 10th. Infinite in XBRL means exactly what the value is. It's exactly 1. It's infinite. Those are all built-in dimensions, and you can see now it is these dimensions intersecting that define the value. That's what XBRL is all about. And again, that's what you are doing every time you tag a value in your own instances. The taxonomy is the structure that holds the concepts and relates the concepts. Schema being where you define the concepts, link base is where you relate them. The instant, you provide additional metadata to further fact to make it unique and specific to your own company. If you look at this in just a given tool about how it looks, you can see all the information placed on that value. This is all electronically analyzable. This breaks down exactly as we spoke about and what's in that example or quick exercise we just went through. But this is what defines the value of 1. And it's all this information together that gets sent through the web that I can bring in electronically directly into my database. And I'll never even look at the number 1, but I'm going to apply my ratios and financial and analytical algorithms against it. And it's going to pump out the information I'm looking for. And the only time I'm ever going to go to look at your individual financials is when I have an anomaly that says, hey, something's not right here. I need to investigate further. So the fact is that if you don't define your values right, then I might as well just start and read your financials to begin with and create my own database. Because if I can't bring it in correctly to apply my algorithms, it's automatically going to be an anomaly. And therefore, I'm going to have to investigate it. That's why it's so important to take care and responsibility to report your values precisely as for what they are so that they can be consumed electronically with no misinterpretation. Again, if you take a look, this is just a narrative, same thing that we were looking at in graphic form, showing you all the pieces that came together to define this one red wool sweater. So with that being said, why don't we just jump in and start going through our example. So this is just a vignette from a segment footnote from a given entity. I thought it was an interesting exercise and it's interesting example purposes because the way they report their segment information is not in a cohesive manner, but they report it separately by component. So revenue from third parties, revenue from related parties, total revenues, they're all on the income statement. The intersegment and intrasegment revenue is eliminated through the segments. It's a consolidating format. It's not unusual, okay, but I thought that because these components are separate, that it would make for a good exercise, because not only do they report this, they also report the breakdown of the sales by segment by the type of product. So it's products and services breakdown. Now, these are two physical tables in the same set of financials in the segment disclosure of those financial statements in printed form, the HTML financials. However, when we build our taxonomy, we're going to build it as a single table because it's all related information and it's going to use compatible axes, and therefore it makes sense to build it as a single table as opposed to two separate tables. Okay, again, this additional second table is a product line breakdown of the previous segment breakdown. So what do? Anytime you're tagging, you want to follow a repeatable standard format. First thing is you have to identify the concepts that have to be tagged. That means looking at your financial statements, understanding the values that have to be tagged, makes those values specific, i.e. the concept that define it. Okay, so here you can see that we went through this. I circled, for instance, the revenues from third parties. If you look at the concepts attributes on the right-hand side in bullet point form, you can see we have revenues by segment and consolidated, and it's revenues from third parties, revenues from related parties, total revenues, which is revenues from third parties plus related parties. We have intersegment and intrasegment revenues, and we use by product line after elimination. So you could see that the circled 119.1 and the 1.1 together add up to the total third-party consolidated contribution of sales by the NGL Pipeline and Services segment. That is what's feeding into the consolidated value on the statement of operations, the income statement. Also, you can see down at the bottom of the lower table that the 47,727 ties up to the breakdown by segment in the first table. So these are really related pieces of information. So for tagging purposes, we're going to build a single table for these. But we define the concepts that we need, and then once we've defined the concepts, we go to the taxonomy and we're going to have to map it. So if we look at the income statement, we can see that there are three elements, primary concepts, that provide us financial tags that embody the revenue from third parties, which is sales revenue goods net, and revenues from related party, and then total revenue net. And the reason why I know that revenues from related party here is excluded from sales revenue goods net is because revenues from related party is in the calculation link base of the US GAAP taxonomy, adding into a component of and add into revenues net. So if revenues net includes two summation children, one of which is sales revenue goods net and the other is revenue from related parties, I know sales revenue goods net can include revenue from related parties that is not eliminated on consolidation. And I know revenue from related parties has to be revenue that is not eliminated on consolidation. In other words, it's revenue from a related party but not a consolidated related party. So therefore, I know that revenue from related parties is my tag for the revenue from related parties that I show on my income statement. Sales revenue goods net is my third party revenue, and revenue net is the total. So now I have three of the concepts I need, but I still need additional attributes to properly define the values in the segment footnote. I need the intersegment sales, I need revenue by product line, okay, and that's both before and after elimination, and I need the consolidated, i.e. the defaulted value. So if I go to the taxonomy, the first place I go for these additional attributes or elements that I need to complete the definition of the fact values in the table, I go to the segment footnote 790,000, and in there I find a table that I can use as my abstract because every table has to start with a table. The consolidation items axis, consolidation items domain, and in there I have two members, operating segments and intersegment eliminations. I have a segments axis with a segments domain that has three members in it, but none of which are applicable to me in this case. But I'm going to populate that domain with extended members that represent my unique segments for my unique operation, because every company's reportable segments are unique to that entity itself. I also found a product and services axis, which just happens to be also in the segment footnote, but in a lowered down area. So I'm going to take that axis and I'm going to relocate it to the table I'm going to build because I need it in my table. Now, one thing I want to point out here is that operating segments member you see on the consolidation items axis in the domain, that segments member represents values for the segment pre-elimination. So it's as if the segment was a standalone reporting entity. So it includes intersegment sales, and that's why I brought the definition up for you so that you could see that firsthand. And the reason why the B is on the segments domain is because I don't have any members there yet. I need to create my own extended members. So I found my elements, right? First we define the concepts, then we go and collect all the building blocks we need from the US GAAP taxonomy, and then we extend the taxonomy. So this is the presentation link base of that taxonomy. You can see that it starts with the abstract, that's the table. I don't need a quote-unquote abstract element above this because there's nothing here other than the table. If I had multiple tables in this link roll, the link roll being the item that starts with the number 002,000, if I had multiple tables in there and I wanted to order those tables in accordance with how they flow in my paper financials, I would need an abstract as a root element holding the tables. Then I could order them. In this case, I only have the table, therefore it's my root abstract. In there you can see our axes, segments, and you can see all the members I extended, products and services, and you can see the members I extended there, and you can see the consolidation items axis, which is a US GAAP taxonomy axis, with the members from it that I need for my given table. Below that, you can see the line items, and here I have no extensions. They all come from the base taxonomy, and they're all represented on the income statement. Okay, you'll also notice that the revenues total, that's the revenues line item that we previously saw. The total is a preferred label. Remember, a label is just a name for a concept in a given relationship. Here, revenues is the total of third and related party revenues. Somewhere else, total, and therefore it would just be revenues. So again, that's a preferred label, and you can see in the far right column of our presentation link base that I gave it a preferred label, a total label. Everything that does not have a preferred label defaults to what is called the standard label. Here's the calculation link base. The Edgar Filing Manual says that anywhere in your financials you have two or more line items that come to a net or a total, you must provide an effective calculation. An effective calculation is a calculation that complies with the requirements of the global specification. It supports the presentation. It doesn't mean that the elements follow the order of the presentation, although in this case they do. And again, when you looked at their financials, you might say, and I'm sorry for jumping back, but you might say there is no calculation because in this table, everything is separate. But there's an inherent calculation here. We know that. There's also a direct calculation here by segment and to the total. However, we do know that on the income statement, these three elements do come in a calculation format. And therefore, I had to build the calculation for the income statement. And that one calculation supports those concepts wherever they exist or appear throughout the taxonomy, because a concept is always the same. So one calculation relationship provides support to the entire taxonomy, which is why the Edgar Filing Manual says that you should not build distinct calculation relationships that appear in multiple link rolls, that you should only build it once. because they don't want you to duplicate or possibly incorrectly state the calculation in multiple places, because then the data becomes unconsumable. Again, calculation link base has one relationship, summation item, and it's communicating to me a very important piece of information, which is how these elements relate on a summation basis. This is the definition link base. Remember that we said the presentation link base has one relationship, parent-child. The calculation link base, one relationship, summation item. And the definition link base has all the other special relationships that exist, including all the relationships for items that appear in a table. Here's our definition link base. You can see that it is in a hierarchical format, and you can see that all the line items and all the members, the actual member elements, the ones that end with the word member, are domain member items. That's their relationship. The domain gets a dimension domain relationship, but if you take a look at, for instance, right here, you can see that the domain also gets a second relationship called dimension default, because by convention in the US GAAP Taxonomy, other than two exceptions, the domain on any axis is meant to be married or stay with that axis, and it receives, by convention, the default relation. Under the spec, any member can be defaulted. By convention, US GAAP Taxonomy, it's the domain member that gets the default relationship, because in default, the value is interpreted to be the entity-wide context. Also, you'll notice that the table has an all relationship. The all relationship is really on the parent line item element, which is right here. But we put it on in this tool, we put the relationship on the table. And what that basically means is that everything is tied to that table through that all relationship. I mean, that's just a layman's way of describing it. And again, I apologize to any programmers listening that might be able to describe that in a much more succinct manner than I just did. You'll also notice that the table gets a context element relationship, and in the US GAAP Taxonomy, we only used the segment relationship for the context element. There's also under the spec, and one that you'll see in your tools, a scenario relationship that you should not use. In the US GAAP Taxonomy, we only use segment. Okay, so the line items are our financial tags. They, in sense of XBRL, are part of a hypercube. Therefore, they get a domain member relationship. Okay, the ARC role is the extended link role that we're talking about. It is isolating and providing a place to gather all of these concepts. Okay, we spoke about context element, but let's talk about order. In order to order elements, you need to have something between the extended link role and that you want to order. That's where abstracts come in. You have to have something to break the relationship, because otherwise the XBRL as a specification just has a random ordering that it applies. The elements could be in any order, it's just random. So you always want something between the link role and the elements within it if you are intending to order those elements specifically to map to your financial statements in printed form. That's required by the EDGAR filing manual for tables and face financials. Okay, so when we take a look at the actual instance, because now we built our structure, presentation, calculation, definition, link bases, the values, and again, I just picked certain of the values. Notice all the context that defines the values. So here's our structure. We have product and services. That's the axis for that. You can see the axis above. I'm just highlighting the domain. We have consolidation item axis. That's right here at the top. You can also see the axis here. I'm highlighting the domain, and the products and services on the right. I'm sorry, I got that wrong. I'm looking for the segment, and I'm having trouble seeing it because my eyes are just getting old. But here's our segment axis and the segment domain. Now you can see the values that you see below tie back to the financial statement. Now notice that the 15916 is being qualified by the NGL segment member. Okay, it's tagging with total revenues, and it's not being qualified by any other member. Why? Because it is the total revenues for NGL products for the NGL segment. Okay, the 1204 is the same. Okay, only it's the midstream services. The total of 28216, notice that it has the operating segments member on it. And why does it have that? Because that represents the total sales for NGL segment, or I'm sorry, I'm stating the segment incorrectly when I'm referring to it, but just give me a second to expand it so I can read it more clearly. I do apologize for that. My eyesight is definitely shot. But it's the NGL Pipeline and Services segment member. Okay, so the 28216 represents the total of all sales for that segment before eliminations. Notice that the 11096, so the 11,096 is being qualified as the adjustment and elimination member on the consolidation items axis. And also notice that it's a negative input. Why? Because the 28216 gets the operating segments member because it's the sales of that segment before consolidation. The 11096 gets the elimination member. Why? Because it's the elimination of the intercompany, intersegment, and intrasegment sales of that member, the NGL Pipeline and Services member or segment. The 15916 is the value of their sales after eliminations, and it's for the NGL and related products and services, whereas the 1204 is the midstream services sales after elimination of that segment. So notice that only the 28216 gets the operating segments member, only the 11096 gets the adjustments member. Also, why are eliminations negative? Eliminations are always negative to the concept to which they relate. So if my revenues are positive credit, then my eliminations have to be a negative credit or debit. That's why it's a negative input. Then you come over to the 17116, the 1.1, and the 17119.1 and the 1.1, and they add up to the 17120. This is where both of those tables in the printed financials come back together. Notice that these are not being qualified by anything other than the NGL Pipeline and Services member. They are the total consolidated sales associated to that segment. Now, I gave you also the defaulted area, and you can see here that this is where the domains all come together. Notice that here I have my total eliminations, which were presented as a negative value in my financial statements. So even though the intra-segment revenues weren't shown as negatives, they are negative because they are disaggregated by segment. So the 24052 is the total eliminations across all segments, and that's why it's defaulted for the segment axis. It's defaulted for the products axis, but it's qualified by the consolidation items axis elimination member. Notice also that the 47161, well, the 47661, the 65900, and the 47727, they have no dimensional qualification on them. They are my one value per line item that is non-dimensionally qualified in this table. Okay, the 47661 represents third-party sales. The 65 represents the related party sales or revenue on my income statement, and the 47727 is the total of all sales for the consolidated entity. Below, you can see in the context table I gave you, the actual context being applied here. So everything in the context column, that's in my taxonomy, but the value is in the instance, the units in the instance, the decimals in the instance, the period is in the instance, it's on the individual facts and the entity. So everything of metadata that goes on the value is defined on that value in the instance. It is the elements themselves, the concepts, that are in the structure of the taxonomy. This is the entire instance, and if you were to go through this, you would see exactly what we just spoke about in the same format. So again, you could see that up top I have where all the domains are coming together, and the only populated cells are going to be the defaulted values that appear on the income statement. Everything else, if you follow across, you could see whether it is being qualified or not by any given axis. Because remember, any given dimension in any given table can have multiple defaulted values, but any one line item in a given table can only have a single non-dimensionally qualified fact, which is where all of your domains come together. And that's why you see this layout just the way that you're seeing it. Again, eliminations are negative inputs. That's not a negated label. That's not anything to do with dimension. The fact is that when you intersect a value with an elimination member, it's got to be a negative input because eliminations are inherently negative, which is why we don't use non-negative or positive element types, data types in the US GAAP taxonomy, because in a dimensional format, any element can have a value that should be properly negative depending on the information, adjective or noun, feature or characteristic placed on that value by the member. So the eliminations are indeed negative, and if we just jump back real quickly to the paper financial, I know I'm running a little bit over and I do apologize for that. But if we run back up to the top, you could see, yes indeed, our eliminations are negative. We don't show them negative in presentational format in printed financials, but that P of CVOP, presentation and disclosure, XBRL strips out the P. It's all about disclosure. Really, I'm saying that, hey, that 11096 is the elimination allocated or applicable to the NGL pipeline and services segment. That 11096 is a negative because the negative plus negative gives me the total 24052.2 elimination across my consolidation. Again, that's why your eliminations are always going to be negative inputs. Negative to the primary concept. Okay, with that, Michelle, do we have any other questions? If not, I'm going to turn it back to you.
No, and we've actually run over quite a bit. So, Greg, I want to thank you very much for giving the presentation today. And, you know, I think there may have been a couple of additional questions, and we'll try to get to those and send out answers to everyone. But thanks very much for joining. We will tomorrow be sending out a link to the replay of the program that you heard today. And we'll also send you information on how you can purchase the slides. They're available for purchase at $25. And I also want to mention a few events that we have coming up where you'll hear Greg as well as other XBRL experts from organizations like PwC, Deloitte, KPMG, Ernst & Young, speaking on some of these key topics, and the FASB as well. We have a one-day workshop in Orlando, Florida on June 12th. And that is our XBRL Essentials Workshop. We'll be sending you information on that tomorrow. We also have a 2.5-day national conference that's taking place September 15th through 17th in Bellevue, Washington. So for those of you on the West Coast, we'd love to see you there. And for the national conference, I want to say thank you to our national conference sponsors, PwC, Deloitte, DataTrack, and others. You can check out the agenda for that program at xbrl.us/conference. So again, thanks to everyone. Thanks very much to Greg for joining us, and look in your email tomorrow and we'll send you more information about upcoming events and about the replay for this program today. Thanks again.